All right, good morning. It is 8:15 a.m. Central Time on Wednesday, August 16th. So we don't have as much time today, so let's jump right into the trade preparation. Now, the larger time frame question in play is whether yesterday's larger time frame balance breakdown is now going to stick. And as long as the market can hold below the 57 to 61 pre-market resistance and the 63 quarter to 73 quarter initial resistance, the breakdown from yesterday would still have potential to remain intact, and we could end up expanding the range lower. So by default, our focus is going to be on the short side this morning, and we are going to exercise caution on the long side. And I think that any long setups that may materialize will require either a real-time market read, so either the market will have to develop some intraday structure and show us some clear sign that sellers are simply not active down here, and that may lead to a long setup, or ES will need to get exhausted into much better areas of support, like down at 44.0975 to 1975 or 43.97.5 to 44.07.5 in order for us to consider taking a long. But at the earlier zones, like the 44.31.5 to 41.5, I am not interested in taking any long setup there, nor am I interested in buying the 44.2275 to 25.75 area. So the earliest zone fade on the long side is going to have to be around the 44.0975 to 1975 zone, or ideally 43.97.5 to 44.07.5. Now this is a larger time frame area of support, so we can be more aggressive at that area. And what I will do is I would prefer to buy near the top or middle of this zone if I am going to buy, as long as we're not trending lower. But what I will do is I will increase my risk to 2R for this particular trade. And if I buy 07 and we get a pop back up into 22.75, 31.5, I can get 3R out of it. Now, technically I'm risking 2R to make 3R, so it's really more like a 1.5R setup, so I might end up reducing the price here, my entry price, to something a bit lower if the market even gets there. So we'll see. This is something that we will have to assess in the moment, but given that this is a larger time frame area of support and the market would be quite exhausted by the time it reaches that area of support, I think it makes sense to be more aggressive at that zone. Now, buyers could also be active at 09.75 to 19.75, and I'm going to set up a variation of this trade where my stop is actually behind my next entry. So this is what we would say is the process of daisy chaining the setup, where we get in at the 09.75 to 19.75 zone, but if that setup doesn't work, then we are re-entering right before we get stopped out of the first trade. So this would be a safer way of executing that larger time frame idea. And in the case that we go all the way down into the 0975 to 1975 zone, I would not anticipate a move back up into the overnight range. I think that could be perhaps the final target, like the overnight low or something. But can we get a response back up towards 40 or so? I think that's pretty doable off of this area. So we're going to go ahead and pick 40 as our high probability, and we're going to pick the overnight low area as our final target. So that gives us 14 quarter as a potential entry. Let's use the same target over here, 40 and 44. So this gives us an entry range of 14 to 15.5, depending on the real-time situation. One of these entries or setups can be submitted. So on the long side, like I said, I'm going to be exercising caution, and I'm going to wait for the market to get either quite overextended, and even then, if the market is in liquidation mode, I may just skip the long side altogether. So the focus early in the morning is going to be much more so on the short side. So let's go ahead and check out the aggressive area, which is 57 to 61, and then the safer area to short is going to be the 63 quarter to 73 quarter zone. Our overnight high is around 67 quarter here, so we definitely want to enter short ahead of the overnight high, because if the overnight high gets taken out, then there would be, I think, around a 73% probability that the low of day will then be above the overnight low. So it doesn't mean that sellers can't be active if the overnight high gets taken out, but the reward potential might not be as large because our downside targets would then have to be a little bit more tame. So for now, I am going to leave it at 44.66 as our entry. In the event that the market goes higher, my expectation is for sellers to be active at pretty much every area of resistance on the way up. So 77 to 85, 89 quarter, and 96 quarter. These are all spots where sellers are likely to be active. So I will consider shorting those areas as well. The only difference being that, again, the targets may not be as large. Now, our intraday bias changing zone is 77 to 85. So up until 77 to 85, there's still potential for larger time frame sellers to step in. But if we take out 77 to 85, then the larger time frame pattern could become a false or failed breakdown attempt. And in that case, we can still get reactions at the resistance areas, but failure at resistance is going to be less likely. So I want to be the most aggressive on the short side at initial resistance, 63 quarter, 73 quarter, and perhaps 77 to 85. After that, the targets aren't going to be as large, in my opinion. So as long as we hold below the overnight high, which would be expected if yesterday's breakdown is going to succeed, so I want my entry to be ahead of the overnight high. And as far as our targets go, our high probability target can quite easily be yesterday's RTH low, and our final target can actually be into the 1975 area. So what we'll do is just get out a point or so ahead of that. So that gives us 66 quarter as a conservative entry. And if we want to take the aggressive one, it would be 63. So what I'm going to do here is set up again a daisy chain type setup here, where I'm going to look for 19 or 20 as my final. And in this case, I'm going to look for a test of the lower part. Actually, I think we can probably target 25.75 in this case. So let's do 26. So that gives us a entry of 55, stop 63 quarter, and then we have the more aggressive entry at initial resistance, one tick ahead of it. That's giving me 2R, and since initial resistance is the dominant inflection point, what I'm going to do is make a copy of that zone, and if I am going to take the earlier entry where I'm front running the zone, I am going to risk 2R on that as well. So let's set this to 63 as the entry point, and I'm risking 2R to get, 3.7, closer to 4, I suppose. So I'm just risking more to make more. And if the real-time situation is such where I don't think we need to be as aggressive, then what I will do is wait for the 66 quarter area. And in that case, I'm just risking 1R to make 3. So the risk reward is much better at 66 quarter. The only issue is that if the market is truly weak, ES should not even go back up into 66 quarter. So that is my main concern here, that if the market is truly weak, we shouldn't really test the overnight high. And if we test the overnight high, then is the market actually that weak? It may not be in that situation. Now, I would still expect a reaction at initial resistance. So I don't think it's going to be a situation where the market just blows right through that zone. And if that's going to be the case, I think we will see some warning signs ahead of that. So again, given yesterday's larger time frame balance breakdown, my focus is going to be on the short side, and I'm willing to be more aggressive on the short side. So the most aggressive short I'm looking to take is 55, and 63 would be nice. 66 quarter, unlikely to get hit, but if the real-time pattern sets up in a way, especially early in the morning in the first hour, then I'm going to be very interested in taking that. And I want the first hour high to be either within or below the initial resistance zone. I don't want to see the first hour high be above initial resistance. That would be another reason for concern for anyone looking to short the market. So as day traders, we pretty much always have to take the real-time intraday situation into account. But when there is a directional bias in play, like we had yesterday and today, right? Yesterday, our short-term bias was neutral bearish, and the focus was on the short side, and we were being careful on the long side. So that's the whole purpose of having a bias to begin with, is to know which direction to be more active and aggressive in, and which direction to be more selective and cautious. So we're going to be cautious on the long side, and we're going to be more active and aggressive on the short side, as long as we're not seeing any clear and obvious signs of larger time frame buyers stepping in. So, for example, if in real time the market opens and we get an open drive up and the tick is holding above zero, and the AD line is showing a bullish disconnect, if there are clear warning signs, then of course you need to adjust and adapt. And that might mean getting a better entry on the short side, or it might mean skipping that short altogether, simply because there is overwhelming evidence that buyers are stepping in. But that is what would be needed in order for our bearish bias to be neutralized. Absent any obvious signs of strength, the focus will be on the short side, and we will be more aggressive on the short side, and we're going to be careful on the long side. So that is how this morning's executions and trade setups are panning out so far. So it is 8:28 a.m. Central Time. Market opens in 2 minutes, so we will wrap up here. Again, if you found this video to be helpful, please do share it with other traders. Help spread the word, and I will catch you on the next one.